Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 751A, and today's date is August 27th, 2015, and the title of this episode is China Warns U.S. It Has Begun Dumping Treasuries. Let's get right into the economic collapse financial news. Let's head out to Greece right now, because Greek Prime Minister Tspiras was giving his first interview, and he said something very interesting. And he said, "I must admit that we had not estimated the extent of the conservative circles' response in Europe, while we overestimated the power of fairness and underestimated the power of money." So what is he talking about there? He's talking about the central bank, how powerful they are. And I think this is very interesting, and it explains a lot of what is going on here today, because we see the central bank threatening government powers today to give up their sovereignty, to sell off pieces of their country to the elite, to the central bankers, to the creditors. And this is their plan. This is how they create their wealth. It's not by creating the paper and ink. It's by using that to put countries into debt and to basically steal whatever they have. We understand in Greece there's capital controls, and we understand the bank deposits become eligible in 2016 for bail-ins. And we know if they're becoming eligible, we know for sure that they're eventually going to be accessed, because we're getting word that the bailout might not even be enough to support the pension payout at this point. It might not even be enough to cover the rest of 2015's liquidity needs. Greece is in a huge amount of trouble at this point. We know they're bankrupt, but all these loans and all this debt that continually piles up on Greece is really not helping whatsoever. And at this point, when we look at Europe, we look at the United States, we look at Canada, it's all falling apart. The debt cannot be sustained. What they did back in 2008, actually prior to that, if we go all the way back to 1913 when the central bank was created, from that point on, we knew that this system was going to eventually come down. And when we look at everything that's been going on, and we look at all the different countries, we see that each country is starting to fall apart. Canada's economy has split in two. The resource producing economy is deteriorating at a breathtaking pace, broadsided by a collapse in commodity prices. And their commodity is crude oil. It's one of the most important ones. Then there's the rest of the economy, which is trying not to wobble too visibly as its foundation is breaking up. Right now, it looks like Canada technically is in a recession. I remember when they were saying Canada's doing fantastic, real estate's incredible, and we're starting to see things really start to fall apart. We see 2 quarters of negative GDP growth. The first 5 months already outline a shrinking economy, dragged down not only by the resource sector, but also by other weak links. We see that the auto industry has really taken a hit there and is collapsing. It declined in April, May, and June. They're trying to push it up at this point. But you know what happens when they do this. It doesn't last. Everything they're trying to do to create bubbles will not last. Yes, in the short term, they'll say everything is fantastic, and everyone goes, "See, you're wrong again. There's no collapse. The central bank came in and saved the world once again." All they did was kick it down the street a little bit longer. But we're seeing cracks, we're seeing signs. We know that this cannot go on. We're looking at all of these indicators, and we're following this path And it's getting worse. I mean, China right now, they're having a very rough time. But you have to remember one thing. The country that has the gold will be the winner. Now, China has been dumping treasury bonds. In the past 2 weeks alone, China has sold a gargantuan $106 billion in U.S. paper just as a result of the change in the currency regime. China has sold as much in treasuries in the past 2 weeks, over $100 billion, as it sold in the entire first half of the year. China is warning Washington right now that they're going to continually do this. They're going to continually dump the treasury bonds, which we knew eventually this was going to happen. So China had dumped a record of $143 billion in U.S. treasuries in the 3 months via Belgium. China has likely sold somewhere around $100 billion in the past 2 weeks. And we do have confirmation that this is absolutely true. China has communicated with U.S. authorities about the sales. The PBOC has sold at least $106 billion of reserve assets in the last 2 weeks, including treasuries. So we do have confirmation that they are definitely doing this. Now, what happens if other nations decide to join in? Because you know who the buyer is of these treasuries. It's the Fed. The Fed bought the toxic real estate. The Fed's been buying the treasuries. What happens when China liquidates all of its treasury holdings is anyone's guess. I mean, basically the whole thing's going to fall apart. Now, suppose emerging economies, the emerging markets of developing countries, which hold about $5.491 billion in reserves, reduce holdings by 10% over 1 year. This amounts to 3.07% of U.S. GDP and means a 10-year Treasury yield rate rise by a mammoth 108 basis points. In other words, the emerging market currencies remain under pressure, and there is every reason to believe that they will. The reserve drawdown necessary to stabilize currencies and maintain unsustainable pegs means more Treasury liquidation and massive upward pressure on yields. As for what this means in the U.S., resulting in substantial upward pressure on yields, and guess what? The central bank will have to print more and more money. QE4, 5, to infinity. Never ending. And China right now is out there saying that we're not responsible for this. They're saying that the devaluation of the yuan didn't bring all of this on. And we know the corporate media is out there. They need a scapegoat. And they're going to use China right now. And they're saying if the Federal Reserve pushes interest rates up, it's going to be a complete disaster. And it will be. We all know this. Everything will come to a screeching halt. They cannot do this. Can they do it a little bit to show that, yes, we're in this recovery? Yes, they can. And they might. They might do it to show that, look, we did it, we're in a recovery, and then all of a sudden, they're just going to let everything go. Everything's just going to fall apart. We see there was a computer glitch in the mutual fund industry. Emergency meetings were called on Wednesday as executives scrambled to respond to a computer glitch that prevented dozens of mutual and exchange-traded funds from properly pricing their securities. If you notice, all these things are starting to happen. Computer glitches, shutting things down, stopping trading, the VIX isn't reporting. All of this happening all at once. Is it a coincidence? Of course not. Because as we know, they're doing whatever they possibly can to keep the system alive, to keep it propped up, and they're losing control. The market will always win. No matter how much money they create and how much they try to push this up, the market will always win out. Here in the United States, we see that initial jobless claims ends the losing streak. It was pushed up a little bit, but really it's bottom feeding, bouncing, because they're manipulating these numbers. Because we're hearing all of these layoffs, and they're trying to tell us that initial jobless claims, it's not getting worse. But we continually hear more and more layoffs. I mean, the Flour Bixton plant, 500 layoffs. Caterpillar, which has continually seen declining sales for 32 months in a row, is laying off 475 more people. Intuit, update, 249 people being laid off. By the way, the Baltic Dry Index right now has dropped once again. It's like 990 points. This is about 100% lower than it was in 2008. What does that tell us? The global trade right now has contracted to the lowest level since 2008 financial crisis. And this is coming from the World Trade Monitor report released August 26th. The trade momentum was minus 0.5% in June, minus 1.6% in May. Import momentum was negative or zero in all major regions. We are headed for a complete disaster. Now, of course, they're trying to make everything like everything is fine. The corporate media, the U.S. government, like I discussed in another report, where Obama came out and said, because of this market crash, everything is fine and the economy is stronger because of it. Of course, after the people of America lost $1.6 trillion. And we're even hearing from the corporate media that the U.S. housing market is very strong at this point. And if there is a rate hike, there'll be no problem for the housing market getting through this entire thing. Because what they're saying is that they're stabilizing home prices and we have supporting sales. So it looks like the real estate market is absolutely fine. There's nothing to worry about it whatsoever. But when we look at the information here and we look at the housing market, we see that things aren't as good as they seem. We see that home ownership rate is at record low. We see that many employees in Citibank, JP Morgan Chase, Wells Fargo have been laid off in their mortgage departments. We see mortgage applications at the lowest point ever. The National Association of Realtors reported pending home sales for July, which printed at half the expected pace of 1%. Instead, it came up at 0.5%. And this was also the slowest year-to-year growth in pending home sales since January. The National Association of Realtors is happy to forecast that the national median existing home price will increase 6.3% in 2015. Yun also forecasted total existing home sales this year to increase by 7.1% to around 5.29 million. Putting this in context, it's about 25% below the prior peak set in 2005. But the biggest surprise of all this is coming from Yun, and we've discussed what Yun predictions were in the past, leading up to the crash of 2008, which were all completely wrong. He says uncertainty in the equity markets, even if the Fed raises short-term rates in September, could stabilize long-term mortgage rates and preserve affordability for buyers. Well, you know what's going to happen here when they raise interest rates. That means you have less buying power. That means there's going to be more people kicked out of the market. That means those people with adjustable rate mortgages, they're going to have to pay more money. That means the real estate market is going to start to deteriorate and implode on itself. It's the same thing that happened in 2008. No difference. And he was out there telling us that everything is going to be fine. Actually, in the fall of 2008, he told us the winter was going to be incredible. Now, the U.S. government central bankers came out with the GDP numbers. Okay, they were predicting 2.3%, which is outrageous in itself. But they decided, no, that's not going to be good enough. We're going to have to manipulate and pump this up to 3.7% to make everyone believe we're in this recovery. They're going all out right now, people, to make you believe that we are in this incredible, incredible, incredible recovery. I mean, think about it. We're in the summer months right now. Retail is down. Home sales are not doing as well. Stores are closing, and they're trying to convince us from everything that's been going on that we've jumped to 3.7%. But when you look at this, you see they revised the numbers, and then they did a double seasonally adjustment to the second quarter GDP numbers, which make the data soared from 2.3 to 3.7. Blowing everything out of the water, the Wall Street consensus, everything. But the real reason for the surge is from inventory buildup. In the first GDP estimate, the BEA now sees a total of about $136.2 billion in inventory build in the second quarter. So that means they created all this merchandise and it's sitting in inventory. This is an all-time record, and a number which suggests that the upcoming inventory liquidation will be truly epic, because this is signaling a complete collapse of the system. What they did right now is they're convincing everyone that we're in this incredible recovery. The stock market came down. They had to do something. They pumped the GDP numbers up as high as they possibly can to make everyone believe that everything is absolutely fine. But we see from the Congressional Budget Office reported Tuesday that this whole situation with the debt level cannot be sustained. That this whole thing will eventually come crashing down. At some point, it's going to get very high level, and it's not going to be able to maintain itself, and it will crash. And we know this. I mean, we're heading into a global economy which is heading into a perfect storm. I mean, there's no way around this whatsoever. And we're getting information right now that this whole system is coming down. And how do you know this? Well, we've looked at all the indicators, and we're starting to hear the same things we heard from last time, which is back in 2008, and prior to that in 2001 and in 1929. Whenever systems fall apart, the corporate media, the government, the talking heads come out with the same type of lines. John Maynard Keynes in 1927, "We will not have any more crashes in our time." Well, that's laughable right now, because we know 2 years later we had a crash, and going forward, all we've seen are crashes. Irving Fisher, leading U.S. economist, the New York Times, September 5th, 1929. "There may be a recession in stock prices, but not anything in the nature of a crash." Really? 1929 September. When did the crash happen? That's right. A couple weeks later. The 17th of September, 1929, stock prices have reached what looks like a permanently high plateau. I do not feel there'll be soon, if ever, a 50 or 60 point break from the present levels. Harvard Economic Society, November 10th, 1929. A serious depression seems improbable. We expect a recovery of business next spring with further improvement in the fall. And we know, going forward, it just got worse. Here in the United States, in 2008, what did we hear from them prior to the crash? From Ben Bernanke, "We are not forecasting a recession anytime soon." Larry Young from the National Association of Realtors, "Real estate is not in a bubble." I mean, we're hearing from SMM right now, and you can see they're already turning it around and blaming some other country, which is China. China's economy does affect us. Not only that, but China is to blame for all the ills of the globally interdependent economic structure. Here's another one from one of the headlines. It's not a crash, it's just the end of a market cycle. Right. And remember what I said, whatever these talking heads, these corporate media people, or the government, or the Fed, anyone in the central bank, whenever they come out and say something, it is always the opposite. Always. Look at all the bills they pass. The Affordable Care Act. It's expensive. The USA Freedom Act. Really, freedom. The Patriot Act. Spying on the people. All of this is always the opposite of what they're trying to push. And we're getting word that things are not going to get better. Last Friday, when the market was down only 2%, JP Morgan's head quant Marco Kalnavak correctly predicted the closing dump on Friday, which according to many catalyzed Monday's limit down open. The head JPM quant warns that a large pool of assets controlled by price-insensitive managers, including derivative hedgers, trend-following strategies, risk parity portfolios, and volatility managed strategies, which is programmatically trading equities regardless of underlying fundamentals, is about to start selling equities and will negatively affect market in the coming days and weeks. For good measure, he casually tosses the word crash in the note as well. So in other words, he is warning everyone that yesterday and today are merely the eye of the hurricane. Tomorrow is when the winds return in full force and things start to fall apart. Now, we know that this drop in the market was a small glimpse of what's about to happen. And I have a video on the x22report.com. You can go on YouTube too. This is Jim Sinclair, who was interviewed by Greg Hunter, which really breaks down what has happened. So if you go to Sentinel Alerts, you can see the video. Just scroll down, or you can go to videos, click on Greg Hunter, and I have the video there, or you can just go right to YouTube and get it. But Jim Sinclair, who works with Bill Holter, laid it out that the plunge protection team lost control, that the market took over. And from his information, things are just going to get worse, not better. And this is why, at this point, if you haven't started, you need to get prepared and get ready. I mean, he's talking about gold in regards to the US dollar and everything, inflation and all that, is going to go to $50,000 an ounce. Why do you think China and Russia have been purchasing gold? Because like I said, the country with the gold will win. So everyone at this point, if you haven't started, it's time. It's time to start preparing. You can go to the warehouse stores, Sam's, Costco, your supermarket, however you want to do it. Buy the canned foods, buy the toiletries, buy water. Make sure you have cash on hand, because once the banks shut down, we don't know when they're going to open. Make sure you have some gold and silver. If you can't afford gold, get silver. I mean, the prices are coming down for you. And we can see that without doing this, you're going to be stuck. I mean, if you haven't started, you can go to lifereliance.com. They have everything pre-made, pre-done. They have food, they have water, seeds, bug-out bags. You can kind of customize what you need. You can go to lifereliance.com to get a head start. If you've been doing it, continue doing what you're doing. Listen to Jim Sinclair on the video. Listen to Bill Holter. Listen to V. You can go to the X22 Report Spotlight and listen to these interviews. And we can see right now, it's not going to get any better. The government right now can manipulate all these numbers they want. But we know the real economy and the manipulated numbers, they don't make sense. Why are all these corporations laying off? Why aren't they showing profits, but the stock market is going up? Please, All these people are working, but retail is contracting. Home sales are faltering and falling and imploding. Mortgage applications non-existent. We know that this cannot be maintained the way it is. They've taken all the wealth, scooted it over to themselves, and they're leaving everyone else to fend for themselves. This is why they've been trying to get as much revenue into the government as possible, because they realize this debt is so big, they don't have enough. This is why they have FATCA. They're going across the ocean to find the money. This is why they created Obamacare, not to give you health benefits. They could care less about that. To give profits to the insurance companies, sure. To bring in revenue, absolutely. And there's another tax, which is attached to the Affordable Care Act. And it's coming in September. Starting at $8 billion a year and increasing to more than $14 billion annually till 2018, every health plan with more than $25 million of premiums has to pay a portion of that giant tax. That means that even Americans who are not covered by Obamacare, but instead have private insurance plans, will still pay this tax through premium increases and other fees. Actually, everyone's going to pay it through premiums and fees. By next Monday, August 31st, or maybe before, the federal government will tell each plan what portion of the health insurance tax they will be required to pay before September 30th. And this tax, and therefore the increases, are going to be pushed on the insured. And this will happen every year. So basically what you're going to see is your premiums go up. That's it. The Affordable Care Act, which is not affordable whatsoever, is going to increase your payments for the next couple of years. Actually, one of the actuary estimates that individual premiums may increase $500 this year, while family and premiums could be $700 or higher. This is what's happening right now. They are taking whatever they possibly can to bring it into the government, to bring it into the central bank, to bring it into the elite. They're taking everything they can from the people. This is what they do in the end. They take everything and they leave the people with nothing. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.